Chapter 7, Tax Credits. In this video, we'll go over Learning Objective 2, determining the Earned Income Credit. The Earned Income Credit, also known as the EIC or the EITC, is available to qualifying individuals with earned income and AGI below certain levels. The Earned Income Credit is meant to assist the working poor by reducing their tax burden and to supplement wage income through a refundable credit when earnings are less than the taxpayer's maximum income for their filing status. Proper calculation of the EIC requires the taxpayer to answer three important questions. Does the taxpayer qualify for EIC? Does the taxpayer have a qualifying child? And what is the amount of the EIC? The taxpayers with children that have children can receive the Earned Income Credit, but they have to meet all 7 rules in order to claim it. Failure to meet just one prevents the taxpayer from claiming the EIC. The first is the AGI limit. This is shown on page 7-8 in your book. The AGI limits are indexed for inflation and can change each year. In addition, the AGI limits vary based on filing status and number of qualifying children. There's no need to memorize these phase outs and everything, as this changes every year. So always refer to the latest tax year book, tax year information as to the phase out amounts. For example, if you were a joint filer with one child, the phase out begins at $24,350 and ends at $46,010. So for my husband and I to be able to claim the Earned Income Credit with my daughter as a qualifying child, to get the entire Earned Income Credit, we would have to earn together less than $24,350. Once our income reaches $46,010, we have maxed out the EIC and cannot claim any amount. Also, you cannot claim the EIC if you are married filing separate. You have to have Social Security numbers for the taxpayer and spouse and any qualifying children in order to claim the EIC. You must be a U.S. citizen or resident alien status for the entire tax year. You must not claim a foreign income exclusion, allowing you to exclude income earned overseas. This is beyond the scope of this class, so don't worry about the foreign income exclusion and the calculation. Just know that if you have that, you can't claim the EIC. Investment income limit. If you generate a certain amount of, quote, disqualified income in 2018 that was $3,500, you're not allowed to claim the EIC. Disqualified income includes most typical forms of investment income, such as interest, dividends, and net income from rents and royalties, as well as most capital gains. Lastly, you have to have earned income. Since the designation of the EIC is to assist the working poor, you have to have earned income. You can be a self-employed taxpayer and claim the EIC. Earned income includes income reported on Schedule SE. So first of all, you can get the earned income if you do not have a qualifying child. However, in addition to the 7 rules that I previously mentioned, there are 4 additional rules that they have to meet in order to get the Earned Income Credit. The first is the taxpayer's age. The taxpayer or the spouse must be at least 25 years old by the end of the tax year, but not more than 65 years of age. So if you're a taxpayer that met the 7 qualifications on the previous page, but you're only 19 years old, you cannot get the Earned Income Credit without a qualifying child. Second, dependency status. The taxpayer or the spouse, if filing jointly, must not be eligible to be claimed as a dependent on another taxpayer's return, whether they are claimed or not. Third, they cannot be a qualifying child of another taxpayer. And fourth, they have to have lived in the United States for more than 1/2 of the tax year. To claim the Earned Income Credit with a qualifying child, you have to meet the 7 qualifications that we mentioned before, plus an additional 3 rules. First, qualifying child. The child must meet the qualifying child test. They're the same test as described in Chapter 1 with 2 exceptions. The child need not meet the support test, and the child must live in the U.S. home for more than 1/2 of the year. Secondly, a qualifying child cannot be claimed by more than one person. Only one taxpayer may claim the qualifying child for the EIC, and the taxpayer cannot be the qualifying child of another taxpayer. So a lot of times it can be a rush to file when 2 parents don't get along. One probably is the only one who would qualify as to get the earned income credit with qualifying child. But if the other one files and uses the child's social security number, that would disallow the other parent from claiming the child because that child had already been claimed. Some additional information in regards to the earned income credit. Each child claim must have a TIN as a taxpayer identification number by the due date of the return. If a taxpayer erroneously claims the EIC due to reckless or intentional disregard, then they lose the ability to claim the EIC for 2 years. If the claim turns out to be fraudulent, then the ineligibility window is extended to 10 years, just like with a child tax credit. If the IRS rejects the earned income credit for any reason other than a math or clerical error, a taxpayer must complete a Form 8862 to claim the EIC in future years. Again, like with a child tax credit, refunds due to earned income credit will not be issued before February 15th of the subsequent year to give the IRS time to review the required information. Also, like with a child tax credit, the preparer must complete a Form 8867 due diligence checklist. An example of the Form 8867 can be found on page 713 in your book. You'll see at the top that there's a box to check as to which credits you are claiming, and you have to go through, and the preparer has to answer all of these questions to show that they have satisfied the requirement to allow the taxpayer to take these credits. So to calculate the EIC, you have to use the EIC tables to calculate it, or ask the IRS to figure for you on Schedule EIC. Appendix B of the book provides the EIC. You compare the results on Worksheet A to the smaller of the 2 calculations. If you take it, it shows up on line 66A in the payments section. For taxpayers with a qualifying child, Schedule EIC is required. EIC is reported on page 2 of the 1040. Remember, the EIC is refundable, so it acts like a payment of tax. Therefore, a taxpayer can receive a refund in the amount even if no tax is due.